13 files are out, and we are going to see why Bill Ackman is betting so heavily on these 5 stocks. I'm Eddie Photographer Mine, and in this video we are going to review today Bill Ackman's Berkshire Square Capital's portfolio and why he's betting heavily on these 5 stocks. Bill Ackman doesn't need any introduction. He's managing Pershing Square Capital Management and is managing around 15 to 20 billion under his management. And so today we are going to review what are the top 5 stocks that is betting heavily on and what he sees for the futures. So the first stock actually is betting on heavily is Uber. Uber has been a new investment in 2025 for Bill Ackman and is representing today almost 20% of his portfolio. And so we are going to see now why Bill Ackman is actually betting heavily on Uber. So we've looked at Pershing Square Capital presentation to understand why Bill Ackman has bought Uber and why he's going to continue to hold this stock for the next few years. So first, what he's seeing in Uber. So Uber is a ride-sharing and mobility platform. So I think that most of you know about Uber and Uber Eats. And so basically what he's seeing first is that a two-sided marketplace, which is actually widespread around all over the world. Uber is also generating almost like 150 billion of gross bookings and has more than 170 million monthly active users on its platform. So one key point and competitive advantage for Uber is definitely its scale, as we have seen that either on the ride sharing or on the delivery side that they have been able to grow very fast and very widely in the market. So Bill Ackman's investment thesis for Uber actually relies into 4 points. The first point is a very attractive business model with their two-sided marketplace where they are able to take a cut on all these different trips and delivery. So which is a very attractive business model, especially at the scale that Uber is operating. The second one is a very strong growth in terms of revenue potential. And what actually Pershing Square and Bill Ackman are seeing is something like 10 to 15% growth in the next few years for Uber, which is going to actually enable them to grow even bigger and increase the scale and so increase their profitability. And so that's actually the third pillar for Uber that Bill Ackman is saying, is that there is going to be a huge margin expansion and with that a huge increase in terms of earnings and in terms of free cash flow. So this is what actually Bill Ackman is seeing in Uber. And there is a huge potential for Uber to grow its earnings. And as per the management target, so in the next few years, earnings and free cash flow are supposed to grow like around 30% CAGR per year. And that's why Bill Ackman, I think, is very interested in Uber at the moment. If you look also at the figures presented by Pershing Square Capital, so today Uber's EBITDA margin are around 4%. And what they are seeing is that with operational efficiencies and with kind of saving and the scale, so they are targeting Uber EBITDA margin to actually grow to 7%, which is going to basically double their margin and which is going to increase a lot in terms of operating leverage. And so this is going to translate in very strong EPS and very strong free cash flow increase. And definitely, I think that Bill Ackman is seeing more than a double in the stock. Regarding Uber, a lot of investors are actually kind of fearful of the new autonomous vehicle wave that is going to come with Waymo and with Tesla robotaxi. But from Bill Ackman's perspective, basically, so this actually new wave is going to benefit Uber more than it's going to be a threat. Why? First, because Uber has a wide diversity in terms of geography, and that is going to be able to partner with a lot of different companies doing autonomous vehicle. And we have seen that already because Uber has partnered with Waymo already in certain areas. And I think that this is going to continue to accelerate. And what we are seeing is that basically Uber is going to be a partner and not going to be disrupted. So Uber is the biggest position for Bill Ackman in his Pershing Square Capital portfolio. But the second biggest one is Brookfield Corporation, ticker symbol BN, with almost 19% of the portfolio. And what Bill Ackman is seeing in Brookfield. So basically, I think the same thing that I've been talking about in my other videos about Brookfield. So the first thing is that Brookfield has a lot of tailwinds. So what he's seeing is a lot of potential growth going forward. Definitely, so Brookfield is going to grow, especially on the tailwind and on the back of AI infrastructures, and also on the back of the growth of its insurance business. So I think that this is the first thing that I think Bill Ackman and a lot of different investors are seeing with Brookfield. They have a very compelling business model at the moment, and even the management is targeting around 15 to 19% growth in terms of distributable earnings. So a lot of potential for growth in Brookfield that is not fully recognized, I think, by the market at the moment. Another thing that Bill Ackman is mentioning in his presentation is the fact that Brookfield, being a Canadian corporation at the moment and not being fully listed as a primary listing in the US, does not have the same type of valuation as its peers like KKR or Apollo, for example, and is betting on some kind of re-rating of the stock going forward when they're going to list primarily in the New York Stock Exchange. On top of the growth from Brookfield and the re-rating from a listing, or I would say more visibility on the US market, so Bill Ackman is betting on a more strong or stronger return on cash. Bill Ackman is also betting on a stronger capital return with both, I would say, a small dividend, but also a continued share repurchases, as the stock is actually today quite undervalued compared to the value that actually Brookfield is communicating to the market. So today, if we look at Brookfield's filings, so the net value that Brookfield is assessing today is more around $100, as the stock is today trading at around $65 to $68 at the moment. So we are seeing that there is some kind of undervaluation, and Brookfield is going to continue to give back return to shareholders through the form of share buybacks. The third biggest holding of Pershing Square Capital is, after Uber and Brookfield Corporation, Google. So definitely, and this is not very clear in the filings because Bill Ackman actually owns both types of Google stock, so GOOG and Google, but it is its third largest position. And I think that is seeing the same as well as what I've explained in other videos, is that Google is going to become the dominant AI player going forward. So I think that there is this thesis around AI, and that Google, with this very incredible team and research team, is going to continue to dominate in terms of AI, is going to continue to have the best AI model, continue to grow with Google Cloud, and going to be the leading AI cloud, actually providing for a lot of different AI startups. On top of that, so what we are expecting also from Google is definitely margin expansion with much more control in terms of costs. So first, operating costs with, I would say, deleveraging in terms of employees. I think that AI is going to help a lot with that, but also increase in terms of margin for the operation thanks to AI. So first, in their main business, so the search business, thanks to AI, I think just like Meta, they're going to grow their margin, even though the volume is going to decrease a little bit. But what we are seeing is that they are going to be able to target people much more efficiently thanks to AI. On the cloud side, so we are going to see as well, thanks to their TPUs, that they're going to be able to provide not only a better offering in terms of cost for their clients, but also for themselves. That's why that Google today, I think that is the best AI play, because it's the only AI play that can actually scale at the scale that Google has today. And they are going to be able to provide AI services to billions of people thanks to their TPUs. And this is going to be a very significant competitive advantage. And I think that Bill Ackman is also seeing that today in Google stock. The fourth largest holding for Bill Ackman's portfolio is Restaurant Brand International, ticker symbol QSR. And this one is actually a little bit surprising, but what Bill Ackman is actually seeing in this particular stock is actually a very strong brand. So with Tim Hortons and Burger King, for example, which is actually quite undervalued compared to its peers, but still has a lot of potential in terms of margin improvement. So basically, this is kind of a turnaround play for Bill Ackman here. And what we can expect from QSR basically is an improvement in terms of margin, and still continue to leverage their very famous brands like Tim Hortons, Popeyes, for example, or Burger King. So depending on the brand, so the turnaround strategy is going to be slightly different, but what Bill Ackman is actually betting on is the quality of the management here, being able to execute this turnaround play and being able to actually bring a re-rating in terms of valuation for Restaurant Brand International. And I think that this is the play that is seeing today. So both in terms of reacceleration of growth for QSR, also margin expansion, and also coming with that a re-rating in the coming years for this holding. So obviously it's a bit different from Uber, Google, and Brookfield Corporation here, but I think it's an interesting play that deserves to be deep dive a little bit deeper. And I think that it's also very interesting to see that Bill Ackman is taking this type of position, even though that he's also famous for having taken a position in Chipotle, for example. So this type of businesses can be very lucrative and very profitable when they actually expand very rapidly and when they improve their operational margin. So definitely, I think this is a good play and that deserves from investors to actually get a little bit more research. And the fifth biggest holding in Pershing Square Capital Management portfolio, so Bill Ackman company, is Amazon. So this one is a new holdings that we have discovered in the new 13F in this Q2 2025. So there has not been a lot of actually communication from Bill Ackman on why he bought Amazon, but we can today make a lot of assumptions. So first, Amazon has three main businesses, all three actually growing double digits. So we have the e-commerce, we have the ads business, and we have obviously the AWS, so cloud business. And I think that what Bill Ackman is actually seeing is that these businesses are very strong and very high margin, and they're going to continue to grow double digits in the coming years. I think that AWS is still poised to grow tremendously from the AI demand. And even though that they're growing a little bit more slowly than their competitors, there is a huge demand for AWS for AI workloads. So this is going to continue to grow. And with their Trainium chips, they have actually a huge capacity to provide actually reasonable costs for all these AI workloads. So AWS, I think that there is nothing to worry about. It's going to continue to grow double digit in the next 5 or even in the next 10 years. Then on the ad business, so a very high margin business and definitely leveraging the Amazon platform. And I think that is going to continue to grow, especially with AI, where they're going to become even more efficient at targeting users and getting a little bit more conversion. And on the e-commerce side, I think that this is really the play that everybody is looking at, especially Bill Ackman. So with physical AI, so meaning robotics, I think that Amazon is going to be able to increase its margin very significantly going forward. And so what we are going to see is that with robotics and robots, definitely there is going to be less a need for humans, and they're going to be much more efficient both in their warehouses but also outside of the warehouse in the delivery pod. And so I think that this is the play here with Amazon, is that they are going to become very efficient in terms of managing their e-commerce business, and we will see margin expansion in the e-commerce business. And if this happens, Amazon is going to become a powerhouse, and this is definitely what Bill Ackman and all the super investors are seeing in Amazon. And I think that this is a very good play because going forward, Amazon has been a bit let down by a lot of investors in the past 5 years, but people will realize that Amazon is really a powerhouse in terms of efficiency. So you have it, the top 5 biggest holding in Bill Ackman's legendary investors portfolio. So Uber, Brookfield Corporation, Google, Restaurant Brand International, and Amazon. So 5 big bets that Bill Ackman is making in the market today. And every investor, I think, should try to deep dive into these holdings because they may be very strong performers going forward. And if you're interested in analysis like this one, please check my other videos in the description. Please subscribe, and I see you in another one. Bye.